Okay, we're going to get going on the crowdfunding panel because this is a big hot topic right now, and we're trying to get all the women that are out in the lobby area to come in. So several of us are out there and trying to direct everybody in. Anyway, for those of you who have been pitching, I'm Melissa Gasnick-Clater. I'm the owner and president of Own It Ventures, and it's a pleasure to have you all here. I was really excited to be able to have this panel pulled together because it is the big topic right now for entrepreneurs who are trying to figure out ways to raise money. You need money. You need money to start up. You need money to grow. So I'm going to start with introducing Jerry Stengel, and then she's going to be moderating basically the panel. We will have time for some Q&A afterwards, and then directly after this is when we go into lunch, and the pitching room will be done. And then we announce the finalists at 2 o'clock. Kevin Harrington comes on at 1. And then we go right into the product pitch tank and the Sharkette tank where the angel investment groups are going to be, okay? So first of all, crowdfunding. Jerry Stengel, I met her through New York Enterprise Report, as a matter of fact. She is founder of The Ventureer, and she gives small businesses and nonprofits a variety of practical, affordable resources to help them understand and overcome the challenges of entrepreneurship. But she also writes about crowdfunding, which is why I asked her to be the moderator of this panel. She does social media and social responsibility and success factors for high-growth women and entrepreneurs. She blogs for Forbes, Huffington Post, American Express Open, Women 2.0, and then her own blog of Vistas. She provides a roadmap to success and highlighting what works and what doesn't. And based on her experience, she is the moderator today for the crowdfunding panel, and she will introduce the rest of the panel. Thank you.
So before I introduce the panel, I want to let you know that you can keep up to date on crowdfunding and how it affects women entrepreneurs by going to ventureer.com/crowdfunding. All of the articles that I've written on Forbes about crowdfunding, including citing Natalia's Pipeline Fellowship, are on that page. And you can also search Forbes for my name, Jerry Stengel, and follow Success Factors of Women Entrepreneurs. And Ventureer, ventureneer.com/crowdfunding. So whenever I write an article about crowdfunding and women entrepreneurs, that's where I'm going to put it. So I'm going to just run down the line, so to speak, and let everybody introduce themselves, starting with Terry.
Hi, I'm Terry Coaxum. I'm the Regional Advocate for Small Business Administration Office of Advocacy. I'm responsible for covering New York, New Jersey, Puerto Rico, and the Virgin Islands, and I work with small business on regulatory concerns.
Natalia?
Hi everyone, my name is Natalia Berti Noguera. I am Nakis Nakis on Twitter, and if you are live tweeting today, the official hashtag is 2013OIV. I love to give shout outs to official event hashtags. I am the founder and the CEO of the Pipeline Fellowship, which is an angel investing boot camp for women philanthropists, and we have two main goals. The first one is to create more diversity in the U.S. angel investing community, and the second one is to get more funding in the hands of women social entrepreneurs. Looking forward to the conversation.
Great. Jeremy?
Hi, my name is Jeremy Andrews. I'm the founder and CEO of Smart Money Entrepreneurs. You can go to sme.vc, it's a little bit shorter. We found over the few months, entrepreneurs is harder to spell. But essentially, we're launching this summer the first equity and debt real estate as well crowdfunding platform for both accredited and unaccredited investors. And I'm sure we'll talk about that as well as we continue this conversation.
Terrific. So if you're raising money, would you rather raise money from a pool that has $23 million in it, or $23 billion, $100 billion, $10 trillion, or $100 trillion? I think you're going to want to raise money from the trillion-dollar bucket. So there are, in the $23 billion bucket, that's angel investing. The size of the venture capital bucket is about the same size. The $1 trillion bucket is the equity bucket, and that's $10 trillion. The $65 billion bucket is the debt bucket. And the purpose of the Jumpstart Our Business Startup or Jobs Act is to really free up money that's in the $1 trillion bucket. So how many of you know what crowdfunding is all about? Okay, so a very, very small number. So great, Nadine, that you know, and you're probably very appropriate for crowdfunding. So Nadine just pitched me in the media group. So anybody, there were very few, but let me ask this question. Anybody give money on a crowdfunding platform? And by that, what I mean is not donations, but has anybody contributed to a product on a crowdfunding product? We have two. That's terrific. Anybody, any entrepreneur who's raising money in crowdfunding? Okay. Oh, terrific. Excellent. Okay. So to keep it simple for the moment, let's just talk about small businesses that are raising money for equity and debt. And right now, that's not legal. So yes, last year the SEC approved the Jobs Act, but until the rules and regulations are in place, you actually can't do equity and debt. There's some exceptions, but for just the simplicity of this conversation, let's not talk about the exceptions to the rule. So what we're waiting for is the SEC to put in place all of those rules and regulations. And the reason that we want rules and regulations is because we want to protect the investor. We don't want anybody who's fraudulent, sort of bilking potential investors. And we also want the entrepreneur not to have the elaborate, complicated paperwork that they need when they're raising money on a stock market. So you need lots of accountants and lawyers and investment bankers if you're raising money through a stock exchange or even through angel and venture capital. So that's the purpose of the Job Act, is to free up the $1 trillion that are available in debt and equity financing. And actually, Jeremy, any ideas to when, any predictions as to when the SEC is going to free up or finally make the rules and regulations?
My background, just to give you a little bit of background, I come from finance, tiger management, hedge fund background, and always with the government trying to figure out when they're going to release the rules. For people who've been following it, the SEC chairman retired last December, and the new chairman came into place. So people have been deciding when this is going to come to fruition. We're looking at late, probably end of year, December, November, most likely 2014. Even in terms of when the rules are actually going to be, implemented specifically. As mentioned, we do a few exemptions through our platform, but for the most part, the rules are going to be in effect. We're hoping early 2014 before all the other platforms are able to start operating legally.
So I'm going to ask another tough question, and maybe for Natalia and Jeremy. I'm hearing from the venture capital world and some lawyers that it ain't never going to happen. The SEC is never going to approve the rules and regulations regarding Jumpstart. Is that a fear that you have?
Yeah, so actually, just to be very candid, this is a very refreshing conversation we're having about crowdfunding, because if we see what is being said in the media sphere, in the blogosphere, it's as if actually having passed the Jobs Act meant that it was legal. And we see a lot of entrepreneurs who are actually creating these crowd investing platforms that are talking as if, guess what, you can come to my platform and secure funding through equity today, which is not the case. And what I would say, just to be provocative, to put stuff out there, in terms of the Pipeline Fellowship, we also only work with accredited investors. And what that means is, and there's several ways to actually be considered an accredited investor by the US government. And the three easiest ones for me to remember are, $1 million of net worth, $200,000 in terms of income, or this is very heteronormative, couples who are married and together joint income of $300,000. So why is this, why why is this happening? Because it's actually much easier, going back to Jerry's point about there exists ways that non-accredited investors can invest in startups. At the same time, it's much easier for startups to absorb an investment that is coming from an accredited investor. Fewer hoops to have to jump through. And the reason I'm bringing this up is because a lot of those issues in terms of the US government trying to protect potential investors is really where the concern is about actually should the SEC make the rules and regulations looser, shall we say. The other issue, and just to put it out there, and as much as TechCrunch, actually, we were just talking before starting the panel, came out with a post that said, is crowdfunding a threat to venture capitalists? And a huge conversation was that if an entrepreneur can have an easier way to get into that trillion-dollar market, what's to stop those entrepreneurs from going there versus going through the very hard, not accessible route of the venture capital? Like the shirt I'm wearing says, I'm changing the face of angel investing. And the reason that I'm doing that is because in 2011, actually, out of all the startups that pitched for funding, only 12% were women-led. And from that 12%, only 26% secured funding. And a reason that people say that, obviously there's, and I'm going to challenge all of you, and I feel like a lot of you have done it already, you have to put yourself out there and you have to pitch, because if you actually don't step up to the plate, you're not actually going to potentially get funding. And then the other reason is that a lot of these white guys are not inviting women entrepreneurs and people of color entrepreneurs to pitch. So here's a little provocative thing, and would love to hear what other people have to say. What I'm seeing with the Pipeline Fellowship, so yes, so one has to be an accredited investor, one has to be interested in the group learning model. We generally have about 10 women in each cohort, and we call them angels in training. And then we have the passion for social entrepreneurship. What about that young woman, and I'm saying young woman specifically, who's making $190,000 and she has no dependents and she has a lot of disposable income? However, she's not considered by the US government as an accredited investor, versus maybe someone who's married and has 3 kids and they have $300K and that person is considered an accredited investor. Those sorts of outliers, I'd say, make me hopeful that there are ways for us to get more people out there to become investors, because that will ultimately diversify the face of the investor and hopefully mean that more women and people of color entrepreneurs will get funding from a more diversified investor base.
Okay. So Jeremy, I just want to circle back to that question as to whether you think, you have a crowdfunding platform. Are you concerned that the SEC is not going to approve the rules and regulations?
And I just want to add to the comment with the right kind of accredited versus unaccredited. We kind of look at it as sophisticated versus unsophisticated. To give you an example, right? Say I have $800,000 in my bank account, so I don't have $1 million net assets, and then I make $185,000 per year. Theoretically, I could invest in startups without, affecting my, ability to operate individually in personal lifestyle. But again, the government has said it can't invest because I'm not accredited. So the line between who can afford it and who can not afford it, I think, has to change. And that's really what we're pushing for as well, because there are a lot of unaccredited investors who essentially have more liquidity, more cash available to invest in startups than the so-called accredited investors. So I think you hit right on the nail on the head. In terms of the Jobs Act and it passing, our platform is in a unique situation because we actually, as I mentioned, launching this summer for unaccredited investors. Our exemptions, we're a broker-dealer, and I can go into exactly what that is. Essentially, broker-dealers are regulatory bodies that actually operate like an investment bank and allow transactions to take place, through the normal commercial, public, and private markets. And therefore, for us, we can operate as a platform for accredited investors. But something I talk to entrepreneurs a lot about is a process called SCORE, S-C-O-R. If you look online, it's a small corporate offering. Since the 1980s, I believe, SCORE has been around for many years, and it's actually what's called a state offering, in which you have the federal regulations, then you have the state regulations. And if you're an entrepreneur, say in Colorado, you can actually, and have been since, like I said, the late 1980s, be able to raise from unaccredited investors, friends and family, strangers, and actually you can actually solicit and advertise your offering online. And it's kind of one of the pieces of government legislation before the internet came about, where you're saying, well, you can advertise through whatever means, through the newspapers, through SCORE. So we've taken that process of SCORE, which is a intrastate offering, meaning that if you're raising capital from investors, you can only raise it within your own state. But nevertheless, it still gives you a bigger pool of investment and from investors within your state that you would not have access to otherwise. And we've taken that process. If anyone's familiar with SCORE, it's a little bit of a cumbersome process for entrepreneurs. You know, you have to go through a lot of paperwork and state filings, 50-page documents. We've taken that process and made the technology behind it pretty streamlined. So once you are able to come onto our platform, when we launch, you'll see the process is pretty simple. You know, almost like a 5-step process that you kind of click, you know, here to kind of review your documentation. Everything's electronic. You know, we have several, 6 partners, technology partners who we've worked with, including DocuSign, who handles our legal paperwork. So if you look at the process from raising capital in the future, a lot of it will be electronic. A lot of it will be streamlined to the point where even on our platform, we don't have to ask you if you're accredited or an accredited investor. We've actually partnered with the IRS, and they have a system that you can't really necessarily disclose. It's kind of private, but essentially allowing me, if you consent, to access 2 to 3 years of your tax returns. And our system immediately looks at that data, right, and kind of puts you in a bucket to see, okay, yes, you're accredited, unaccredited, without having to go through the normal channels of saying, let me call you up, let me see if you can send me over your documentation. We can actually access that without having to, you know, have any human interaction, and that's kind of a revolutionary thing that the IRS has just come out with last year. So it's pretty exciting for us to be able to do that.
So if I can just add one follow-up question
Sure.
before getting to a question for Terry. Can you do this in New York or just in Colorado and the other 20 or so states where you are?
Of course. You know, we're a Delaware Corp in entity in New York, and of course, being the home state, we have to talk to Bloomberg about that. New York is one of the
Cuomo,
right.
it's a state.
Well, yeah, of course. It's his state. Yeah, there's there are 40 of 50 states that allow this process, and New York, unfortunately, is not one of them. New Jersey is, Connecticut is, you know, the surrounding states, but New York has, you know, usually with businesses has had a struggle with kind of, you know, pushing the envelope. So, but of the 40 or 50 states that are allowing it, you know, California, Colorado, it's actually pretty exciting for us. But we're hoping, you know, New York and our home state will eventually get around to doing that.
Okay, terrific. Terry, can you talk a little bit about how entrepreneurs are currently using crowdfunding?
Sure. I have to smile. He says, not in New York yet. A couple of things. So what are we talking about here? We're talking about an alternative means of raising funding for entrepreneurs. And so right now, as Jerry said, the equity model is not in existence yet until the SEC passes the rules. So I just want to touch a little bit about what those rules are so that you'll understand exactly what we're talking about. So when we're talking about the equity model rules, we're talking about allowing security issuers to raise up to $1 million in small increments. And so we're opening up, this is opening up, you know, ordinary people will be able to put money into this particular model. And they'll, in exchange, they'll receive shares, equity shares. That, again, that is not in existence yet. That's not permitted until SEC rules are passed. And then as another result of that is that it requires the funding portals to register. And so FINRA, you're going to hear a lot because that's the actual portal that you'll be registering on. So those models don't exist. That's what the SEC is looking at. And so when we're talking about these rules, I just want you to be clear. So you'll be able to raise up to $1 million in small increments. Ordinary people will be able to do that. Now, the model that we are really talking about, and some of you have actually been a part of, are the charitable models that exist on sites like Indiegogo, Kiva Zip, GoFundMe, and Kickstarter. Those are all the models. Those are charitable models, whereas small businesses and entrepreneurs and startups are going on these sites and they're saying things like, I have one example of a particular bookkeeper in New Jersey. that wanted to go on. She wanted to expand her business. She wanted to make it more electronic. She wanted to make it more modern, and she wanted to make it mobile. And she was looking for about $5,000 to do this. And what she did was she went on a site called GoFundMe, and she was able to raise $5,000 to be able to do this. And then there's so many other models. Kiva Zip is a model in New York, and I was talking to Natalie just before I came on. There's a lingerie. There's a young woman similar to you guys are pitching your ideas today. I saw an idea for a baby mat. Where is she? She was pitching, she's pitching a baby mat where actually she'll be able to, your child on whatever platform, whatever place you are, you can actually just lay out the mat and your child can actually just be on the mat. But she, you know, those are the kind of things that she's looking to expand. She has the product, she has the prototype, but she's looking to actually get products together and move it forward. And that's the kind of model. But it's a charitable model. And that's what we need to be clear on. The equity model is not permitted yet. The charitable model that you guys are talking about now, the ones that you have probably been a part of, those are the models that are in existence now. And so as we move along, you know, I'm talking to small business. They're really excited about that pot of money that Jerry referred to that hasn't been accessible to them in the past. They're really excited about it. And the Jobs Act is a way for the president actually wants to loosen the regulations so that those other models can exist. But there are some concerns, and we can talk more about it. And I know Natalie mentioned some concerns, and there'll be some more concerns that we'll mention along the line. But I just want you to be clear on what we're talking about when we're talking about the crowdfunding model that exists today.
So I'm going to ask both Natalia and Jeremy to follow up on that. Is it just, would you call it charitable, or would you call it?
So I was just going to clarify. I actually was speaking on crowdfunding and angel investing at South by Southwest a few weeks ago, and it just was very simple. I just said, you know what, right now tech platforms, the type of crowdfunding they're facilitating, it's donations. So that's my answer to you, it's donations. And at the same time, especially for those very product-heavy types of businesses or startups, it's a transaction. You know, it's almost like paying in advance for that product. I also am so glad that you brought up just different ways of thinking about crowdfunding. I'd even offer up the idea of offline crowdfunding in terms of crowd investing, which is, for example, what the Pipeline Fellowship is, which is actually people, a group of people. How many of you were here to were able to hear Joy Desjardins' keynote this morning? So one of the things that I love that she said, and she's at Joy DJ on Twitter, she said, at the end of it, lending isn't smart money. Like, loans aren't smart money. And so just bringing it back to one of the reasons that I'm so excited about, whether it's a tech platform or whether it's facilitating 10 women, you know, who are used to donating, using that example, and creating this bridge between philanthropy and investing, is because it's smart money. You know, there's tons of women out there who, and particularly women of color and people of color, who haven't actually thought about the way that they could not just invest in terms of the financial capital, also the human and social capital. And so one of the key things for me in terms of when we're selecting our fellows is really making sure that they're diverse for two main reasons. The first one, and when I say diverse, once again, I'll out myself as a queer Latina. I think about diversity in many ways. The way that I think about diversity is age, so intergenerational, multi-ethnic, multicultural, different backgrounds. It's, first of all, so that through the group learning model, they're actually learning from each other. And lawyers are great. However, having 10 lawyers who practice the same type of law, they're not going to be bringing in this type of social capital and intellectual capital that is coming from different sides. The other thing is, how many of you know a successful entrepreneur who is a woman? Okay, well, good. And make sure to keep collecting them. You know, all those people who spoke today, it's so important to have almost like a personal advisory board before you go out there and create your company advisory board. So why am I bringing these up? Because guess what? Guys, especially in the West Coast, you know, once they become an entrepreneur, they're like, oh, I'm investing. I'm an angel. I put down $2K in, you know, my buddy's startup. This woman, actually, she heard me speak about the Pipeline Fellowship at a conference I'd say like a year or two ago, and she was like, this is exactly what I need. I need to go through this boot camp. And as so often happens, on peeling the layers, it had turned out that the year prior, she had invested $75K of her own money in a startup, and she didn't consider herself an angel. So just putting it out there that, you know, it's so much about owning it, and it's about also thinking about, for you, the smart money of what it could mean about bringing in angel investing, venture capital, and alternative, as you mentioned, alternative forms of capital that are not simply, for example, debt or even donations that are just from anonymous people, you know, through the web.
So I'm going to ask Jeremy to address this. Natalia used a term, pay in advance. I don't view that as a donation. Can you address what entrepreneurs are using crowdfunding to pay in advance for products?
Sure. So the two models, actually I know the founders of both these platforms, Kickstarter and Indiegogo, are two of the premier kind of pay in advance product Amazon-like models where, you know, I'm deciding that I'm going to build a widget or, you know, a pen or a candle. Let's take a look at a candle. I'm building this candle. It's going to be something that's evolutionary. That it's going to be it's going to last forever. I'm never going to have to blow it out. It has some great product features. You'll never have to get another candle again. I haven't built it yet, but these are the prototype designs. This is what it's going to look like. I'm trying to outsource this to another country to manufacture. Everything's ready to go. I just need your investment. What you do in that case is essentially is paying ahead of time, $5, $10, however much the candle I estimate as an entrepreneur is going to cost. And by prepaying for that, once the funding is complete on Kickstarter or Indiegogo, I then can go and manufacture the product, which I kind of already showed you through the schematics and the design, get that to production. Once it's produced, ship you the product as I delivered on the Kickstarter Indiegogo site. So this model is essentially usually for single products that I'm going to, you know, I had an idea, I'm trying to build this product, and all I need to do now is to have your money, investing-wise, to bring this to production. So you're paying for a physical product. Kickstarter and Indiegogo are pretty specific about that, meaning that, you know, if you're not producing a physical product, it's not a right fit for you. But this model has been going on for about 2 years, I think, and it's been pretty successful for both the company entrepreneurs and people who actually have received the product to date. So it's been pretty touted as one of the pretty successful crowdfunding ventures that have come to date in terms of a pre-product type model, which is different than, like I said, the other models in existence.
And can you charge a whole lot more than what the product is worth?
Right. So, and this probably goes into it leads itself to fraud and the things in the future.
No, not to the fraud part.
Right. No, but right. In terms of charging more.
And why you would do it and how you package it.
Right. Charging more and how you package it, and, you know, what's the price point and
I'm not
paying.
trying to be devious.
No, absolutely. So the price point obviously is set by the entrepreneur. You know what they're looking to do. The entrepreneurs that have raised on Kickstarter and Indiegogo actually have learned a lot over the last 2 years, being that, you know, and I can probably forward to the group some case studies that have gone out where entrepreneurs, you know, you want to have a good value product, but sometimes when you're an entrepreneur, you're not familiar with manufacturing, you're not familiar with other costs, because you maybe don't have the finance background or you don't have the background in the industry. So what will happen is that you price it $5, but when I go to production, try to produce it in, you know, another country or even in the US, you know, my production costs are a lot higher than I thought. I can't produce at that cost that I said to you in the beginning. And there kind of comes in the problem where now I have to either have to go back and, you know, reinvest additional capital, or, you know, unfortunately or unlikely say to the people who have donated in the beginning, well, I can't actually produce the product. I have to do a different raise and, you know, hopefully get more money to produce it. And of course, that's not an ideal situation. So pricing the product and packaging it when you're going on these platforms and understanding the cost before you're asking for money is crucial, because you want to make sure that the backers, as they're called, the investors on these crowdfunding platforms, Indiegogo and Kickstarter, do get their product delivered. And timelines necessarily have not been set, but for the most part, entrepreneurs look at production, you know, 6 months, 3 months. It really is a case-by-case basis. But when you're looking at backing or donating to these entrepreneurs on these platforms, always take a look at, you know, what they're really offering, not just the product, the price, but also in terms of the timeline for delivery. Because sometimes, you know, if you're looking at manufacturing a car, of course, a little bit different timeline than manufacturing a pen or a candle or something less complicated.
So, Terry, I think that there are lots of entrepreneurs that actually do know what their costs are and what their timelines are, and they may sell some of the product at a discount, but they may also sell some of the product with a bunch of other services for more money. Do you have any examples of that?
I have some examples of small business owners that actually have products already and they want to expand. And so what they're looking for is funding to be able to expand. And some of the things that, that they give as incentives for you to give the money, one of the things is that they gave T-shirts just so that you can market their business, so to speak. Another thing, they'll give you bragging rights. You know, if you give a certain amount of money, they'll give you bragging rights. But a particular example that I have in mind is a small business that she actually had already started. She had been going to the shows. She had her product line is she wanted to be able to sell her merchandise on college campuses. She had created a clothing line and she wanted to sell it, but she wanted to do it mobily. She wanted to do it with a truck. And so what she was trying to get money to renovate the truck, basically. So she had already been on the road, so to speak. And so she wanted to renovate this truck, and she actually went to Kiva Zip, and went online and was able to raise, she only needed about $5,000. She'd been turned down by 4 banks because she's 23 years old, and she didn't really have a credit history. And so people were looking at that, where the model, this particular model is based on trust as opposed to your credit scores. And so she was able to go on and raise the $5,000 and to renovate this truck, and now she's up and running. So those are, that's one example, but there are tons of other examples where they already have the product. They just want to either expand or they want to find a location. There's another model of a restaurant owner who he wanted to, he's in a trendy neighborhood. He wanted a particular coffee maker because he felt like this would kind of expand his brand a little bit, and it was $2,500 to do this. And so he was able to go on and to raise, he got 25 people to give $100, and he was able to get this coffee maker and turn it around relatively quickly. And again, the model is based on trust as opposed to credit. So those are all existing, those are businesses that are already in existence, or startups are already in existence, and they're just looking for, like I spoke to a couple of businesses in the audience today about they already have their product, they're here to pitch their product, but they want capital to kind of expand on that. And these are some of the crowdfunding models that I believe that can speak to what you're trying to do as well.
I'm so glad that you brought up marketing. So how many of you are looking to raise capital? Okay, so your current reason for raising that money might actually not be the most strategic one. And so I'm just putting that out there because one of the questions that our Pipeline Fellowship application includes is how would you use, let's say the $50,000 that would be invested in by Pipeline Fellows? And just to put it out there, all the selection process is owned entirely by the Pipeline Fellows. I do not have a say at all. And it's so interesting how, for example, when someone says like, well, to pay off a debt, or, like there's certain things that, they just don't excite a potential investor. And especially if someone that you're looking to secure as an investor is actually a marketing guru, thinking about putting $50K to pay someone else, maybe getting that person to say, you know what, I'll get some equity and I'll be your marketing guru, and that's a really great way for you to think about just securing the resources that you need. How many of you entrepreneurs how many of you are entrepreneurs? Let's start there. And how many of you have, before today, had thought about giving a piece of your company? Okay. Oh, it's like slowly, it's like, I'll admit it. So I will leave you with at least one tagline that I love. So Minnie, she's a serial entrepreneur. She's awesome. She's Morgas Chef Restaurants. Have you heard of Morgas Chef? So she actually, before launching this franchise of restaurants, she actually, during the .com era, she built a online design company. She sold it, and she had to sign a non-compete. So she was like, well, what do I do now? And so she decided to start the restaurant business. This is what she said, and I love it. She was like, would you rather own 100% of nothing or 1% of something huge? And personally, I think a lot of women entrepreneurs need to have that conversation with themselves. And at the same time, I will give a shout out to this book written by Adelaide Lancaster and Amy Abrams, which is called The Big Enough Company. So a word that was used, a term that Joy Desjardins used this morning, which was lifestyle company, is often used in a not necessarily complimentary way when talking about women entrepreneurs and why a lot of these white guy VCs are not interested in funding these companies. And what I loved about that book, which is called The Big Enough Company, was their first edition cover showed like extra small, small, medium, large, and then the word "you" was circled. And it was really very much about empowering entrepreneurs, also guys, and about just their decision, you know, like, do you want to be a high growth company or do you actually want to be smaller? Decide what is big enough for you. At the same time, if you think that you can scale and your business model can actually be a high growth one, I'd say keep that in mind and remember what Minnie said, you know, 100% of nothing or 1% of something huge.
So actually, I just want to add on to the question, the original question, which is how companies are currently using crowdfunding. So in one of the articles that I wrote, and I'll pass it back to you in a second, Jeremy, this is Back to the Roots, and they have a product where you can grow mushrooms in your home using coffee grinds. And I see some people shaking their heads. They were coming out with a new product they had enough money to build the prototype, which was an agroponic fish tank that you could grow basil and parsley and mint, but they didn't have enough money to manufacture the product. So they did a campaign on Kickstarter, and they wanted to raise $100,000. And they asked people to pay in advance for the product, and that product was $40 or $50, but they also asked people to pay $1,000 or $10,000. And what they did was package getting the agroponics fish tank with getting the two founders coming to the town and doing a seminar on how the science of the agroponic tank worked. So you could have them come in and talk to your elementary school class and pay $1,000 for that. If you wanted, you could attend their strategic planning meeting for $10,000. So there are ways of packaging products so that you can pay for your product in advance, but you can also earn some additional money. And maybe you want to call that a donation, or maybe you want to call it a contribution. I'm not quite sure. Jeremy, any other examples that you have of anything similar?
That's actually good. And the packaging thing, you're
Yeah.
absolutely right. A lot of entrepreneurs are finding creative ways to do that outside of the product, where you're realizing that it can be a revenue stream for the company because of the fact that you're not only producing something, but the backers, the people who are supporting you, are really invested more ways than one in your company. And if you're an entrepreneur, selling services in addition to the different raises on the platform, $1,000 here, $500 if you just want to. And sometimes I think it's a combination, because sometimes you may say $5, you don't have enough to get the product, but you just want to feel like you're a supporter and
Right.
be your name be put on the website as one of the supporters. So there's different levels of contribution that not necessarily have to associate yourself with buying the product directly, because some people just
But
want to
let
be
me just
associated.
interrupt for a moment. Back to the Roots charged $1 to be put on their email list. So if you wanted updates, and they made money on that because people wanted to help and they wanted to do it in small increments. They had a $5 or $10 product, which was the T-shirt. So,
Right. So different levels of
Yeah.
contribution, and there are a lot of campaigns that are pretty successful. A lot of creative artists, filmmakers, a lot of times who will go on these sites because anyone who's used to be in the film industry a long time ago, and producing a film is quite extensive work, and of course a lot of money. And producing a film, you may not necessarily care about the film itself, but you've always wanted to be on set, or always wanted to meet this famous actor or famous actress, and by doing that, you kind of are able to contribute in a different way than just the film itself. So absolutely, there are a lot of options.
You used the word revenue stream, and I just wanted to bring that up. One of my favorite hashtags on Twitter is language matters. So one of our alumni, her name is Kelly Hoey, and she launched an accelerator for mobile tech startups that have diverse founding teams. And she has been known to say venture capital is not a revenue strategy. So I'd even want to push it further in saying crowdfunding is not a revenue strategy, and that we could actually look at it more in terms of brand awareness or market research. And I wanted to give an example. How many of you have product-based businesses? So I've been mentoring several entrepreneurs, and sometimes they're like, I don't know which scarf. Like, I've designed all these scarves. I don't know which scarf is like the popular one. And something that actually a crowdfunding platform and a crowdfunding campaign could be really great at is have those 5 scarves and see which one actually gets more backers. And that might actually give you a little bit of a sense of almost like a focus group on what is working within that. And now it's my I want to give a PSA. So Indiegogo actually has a woman co-founder. Her name is Danae Ringelman. She's Gogo Danae on Twitter. And she actually started Indiegogo before Kickstarter. And I believe Kickstarter is just all guys. And I'll say, I think, all white guys. And so just putting it out there that would love for you to support a woman entrepreneur through Indiegogo when you're thinking about getting yourself out there. And one of the key things that they say is have a video. Like, have a video. And then the other tip I'll use that I just recently found out I heard about is make sure that you're able to have at least 30% of whatever you're raising on the first day already pre-committed, because it's so much about momentum. And they realize that if you have like, like let's just say entrepreneur.com writes something about your campaign, and on that day people go through that and through that article, and they see that less than 30% has already been raised, you're probably not going to get those people to donate. So just another tip for you.
Terry wants to say something, but before I turn it over to Terry, just a couple of words about, she answered it, okay, about Indiegogo. So Indiegogo, 42% of all of the raises on their site are done by women, and women are actually more successful than men. They're raising more money, and they're raising it from more people. So women are having a lot of success on crowdfunding sites. So one of the reasons I started writing about crowdfunding is, by and large, women tend to be later stage adopters, and I wanted to make sure that women were not late stage adopters. We tend to hold, we like guides and roadmaps and others to be telling us what to do. What I think is happening is that on sites like Indiegogo, the millenniums are leading the way. So look to younger women as your role models in terms of how they're doing crowdfunding, and how they're doing it right now will probably have applications to the way that you're going to do it with equity and debt financing as well. So I want to introduce a couple of other questions as well. Terry, can you sort of address why entrepreneurs are so excited about crowdfunding, and what some of their fears are as well?
Sure. Well, first of all, women are definitely on the rise as far as small businesses are concerned. The Office of Advocacy, actually, two of the things that we do the metrics highlighting the importance of small business, and we did a report on women on business, and women on business is growing twice as fast. So please be encouraged, and I see a lot of women in the room, and men, I'm not trying to leave you out, but please be encouraged with your business. So what are entrepreneurs excited about as far as crowdfunding? They're excited that there is a potential to alternative funding. They're looking at this big pot of money that Jerry referred to when we first opened up this panel. They want to be able to get a piece of that pie to be able to expand and grow their business. But there are concerns, and the business stakeholders are concerned, and I know that Natalie already spoke. The venture capitalists and the VCs and the angels are concerned that this particular, when the regulation comes forth as far as the SEC is concerned, that it's going to, there is going to be, the first concern is that, and Jeremy referred to this, investor fraud. So basically, we want to protect the investors. And so that's one of the main concerns of investor fraud. The VCs and the capitalists are concerned that this particular crowdfunding model is going to impact them, negatively impact them. Because let's be clear, some of the investors that are actually investing on a crowdfunding platform, as far as equity is concerned, will not have the same knowledge and experience as the VCs and the angels that Natalie is now training. And so that there's potential, you know, that this will impact the VCs and the angels negatively. And then Natalie, and I know Natalia, why am I changing your name? I'm so sorry. Natalia, and let me roll that, can talk about that more because she's training the angels. And I know that Jeremy has probably heard a little bit about those concerns as well. But they're excited about this new platform. They're excited that there's potential to raise money and to raise it pretty quickly, because some of the businesses, the particular examples that we gave, they were able to turn this money around in 3, 4, 6 months to a year. And this isn't, you know, how many of you have gone to get a loan from a traditional, either a bank or a microlender? Anybody? Few of you? How quickly did that process go? If it went pretty quickly, shake your head up and down. If not so much, exactly. And that's why they're excited about this crowdfunding model, because they're turning it around pretty quickly.
So, I was going to ask Jeremy to chime in, but go ahead.
Oh, so several things. The first one is in terms of just starting from the ending, in terms of the lending and the debt, to be once again provocative. What is the face of an entrepreneur who secures microfinance or like microlending? Woman of color entrepreneur. What is the face of someone who secures venture capital? White guy. And in terms of the relationship to money, when we're talking about debt versus when we're talking about equity, it's a very different sort of relationship to money. Now, this is usually where I qualify. I'm not saying that when entrepreneurs, we need to go out there, raise millions of dollars, and then, you know, have the business fail. Although at the same time, I'm a huge advocate for fail fast. You know, that's what we need to do. It's a very different relationship, you know, when you're thinking, I still need to, like, pay back $500, versus sometimes it just happens that someone needs to pivot, you know, like that first business idea or second business idea didn't really work out, and then, okay, oops, those $1 million, you know, like, well, let's go on, you know, let's go on to the next company. One of the stories that I just find so shocking, and especially as each year Catherine Bigelow adds to her impressive portfolio, apparently Cameron Crowe, 1 year, you know, he had a flop. And the next year, he was able to secure funding like this for his next movie. Catherine Bigelow had a flop. It took her 7 years before she could secure funding for her next movie. So at the same time that I hear a lot of conversation regarding venture capitalists being a little bit wary and weary about, well, all these unsophisticated people coming into and potentially they don't know what they're doing, a lot of times deals are made over a beer. A lot of times deals are made like, once again, white guy comes in and says like, this is my idea. Sure, I'll invest it. And in terms of the expectations that women and people of color entrepreneurs have to almost adhere to, it's just a much higher range. And it's almost like, well, what's your idea? Twitter got millions of funding before it had a revenue model. So just to push back in terms of, it's not just about necessarily protecting the ecosystem from unsophisticated investor. I say that one of the reasons that we see a lot of women entrepreneurs doing so well with crowdfunding is that when we talk about the levels of funding, we talk about friends and family, well, bootstrapping, friends and family, angels, VCs. Guess what? A lot of women entrepreneurs and people called entrepreneurs, we don't have friends and family who have the money to be our friends and family around. It's that lack of access, you know, like a lot of guys particularly, they have the uncle, and I'm saying uncle on purpose, they have like the father who works in venture capital and are much more connected. And I'll leave you with this in terms of networking. Apparently, guys tend to have one huge network and they derive personal and professional support from it. Women, apparently, we tend to have two separate networks, one for professional support and one for personal support. And we're missing out a lot because we're not asking our professional network for our personal stuff, and we're not asking our personal network for professional stuff. great example. As I mentioned, you know, like two guys meet over a beer, they strike up a deal. I have someone who actually told me, a woman entrepreneur who was like, it wasn't until the 4th month that I was doing downward dog next to this person that I realized that she could be a potential investor. And so that's like such a huge key aspect in terms of you today. Great, make sure to connect with the speakers, make sure to connect with the media, and I'd say, like, usually I get asked in terms of mentoring, you know, what is one pickup line? I'm like, the pickup line doesn't matter. What matters is what you do after.
Okay. So before moving on to Jeremy, because I want to ask you to circle back to the question about entrepreneurs, I just want to touch on networking. So networking between men and women is actually a little bit different. Women are great collaborators and communicators. We are not great networkers. So we build deep relationships and have to be really comfortable before we do the ask. Men do wide and shallow, so they know tons of people and are not afraid to do the ask. So if I leave you with one thought, it's go out there, network wide, maybe two thoughts, network wide and ask. So Jeremy, I want to turn back to why are entrepreneurs so excited about crowdfunding, and what are some of their fears?
Sure. So as you know, it was mentioned as before, that the excitement kind of contains around the ability to raise capital, and just something that was said before in terms of, you know, rich uncle, where I didn't come from money, and so, you know, working for a hedge fund and finance, you see this different world as, you know, minority, and so it's interesting when angels and VCs, oh, you need to go to your friends and family, and I say, well, I don't know who your friends and family are, but mine are not that, you know, ability to invest. And so one of the things on our platform, just to give an example, Smart Money, we actually have segmented the investor kind of filter. So we've done a lot of research and realized that there are different communities, pockets of communities, talking about, you know, women entrepreneurs, you know, minority entrepreneurs, different ethnic classes. And so we've actually taken that. If you look at the history of investing, a lot of people invest in their own communities. And on our platform, investors are actually able to classify what they want to invest in. So say I want to invest in women entrepreneurs, or look at the criteria of only women entrepreneurs and invest, or look at only minority businesses and invest. And there, from our data, looking at, there are a lot of people who actually go toward that route because they feel not necessarily more comfortable, but they want to support, right? They want to create a level of community within the online investing community, which is something we're really excited about. And entrepreneurs are also excited because you look at, you said the door, you know, I go to, and I talk to tons of VCs and angels, and you know, but it's still the same kind of, is this person like me? Or you go over a beer, well, I don't drink beer. Well, you know, what's gonna happen in that aspect of how do I reach that group that has investment capital, but also the investment capital, the aspect of who has investment capital is changing, right? It's not always going to be, or has not always been, you know, the normal traditional angel VCs. There are a lot of other people that have capital to invest. They're not necessarily accredited. They may be unaccredited, but sophisticated, or whatever the case may be, and have money to invest. And these days, you know, it doesn't take $1 billion to start a company. Of course, you know, you're talking about little less amounts of capital. With technology, it's quite impressive where, you know, 10,000, 5,000, 15,000 can actually jumpstart a company. And I don't know if anyone has watched the show Shark Tank. We actually had an event with Damon John in November. And one of the things that, you know, we were talking about, or, you know, starting his company with literally zero, where you're building it up, and he had like a $10,000 investment here, $5,000 here, where it doesn't take a lot. It doesn't take a lot these days to do that. So I think that's why entrepreneurs are really excited that there's different areas and pools and people who are willing to take a look and invest in you rather than traditional sense. And I think also VCs and angels are scared of kind of what we're doing personally, but also the model is changing because it doesn't have a chance to affect their livelihood. But nevertheless, you innovate, right, and you move on. And I think the excitement around that is that crowdfunding done correctly can really push the envelope of what businesses are going to be able to do in the future for capitalization.
So we're coming close to our closing, so I want to ask one or two more additional questions. One is about best practices, and Natalia already addressed a couple of them. One is the importance of priming the pump, and Natalia said, you know what, day one, before you raise, you know, you open the floodgates through a crowdfunding platform, you have to have already raised money. So whether that's 10, 25, or 33%. You have to prove that you're trustworthy before you open it up to the public. So get your friends and your family to go online that first day or that first hour, you're not going to be successful. I had somebody asking me, what am I doing wrong? What's wrong about my message? It's not your message. If you haven't primed your pump, it's not going to be there. Natalia also talked about the importance of telling an engaging story. Video is great for doing that. So, you know, have your 2-minute video. Make sure that you tell this compelling story. Any other best practices, Terry?
I'm going to say one of the best practices is, and it was already mentioned, don't be afraid to ask. A lot of times we're very afraid to ask. And what you'll realize is that, you know, you've heard no before. It's not like you can't hear no again. So ask, and you may be surprised at the answer. And Natalia mentioned networking, and one of the books I want to leave you with is Harvey Mackay's Dig the Well Before You're Thirsty. So don't wait until you have to drink to start digging the well of relationships and networking. Do that ahead of time so that when you do need to cast your net wide, you can actually go into that pool and cast your net and be able to pull out some fish that can actually make your business thrive and grow. And the third thing is that you have a business advocate. I am your business advocate. So if there is some regulation, some regulatory concerns that you have, or there is some metrics that you need on the importance of small business and especially women-owned business and what they're doing, don't be afraid to give us a call at the Office of Advocacy. And remember that Martha's here in the front, and so I can't forget the 3 C's of the Small Business Administration: capital access, counseling and training, and contracting with government. We're here to help your business grow, so please allow us to do that. Thank you.
One thing I want to add to that, as well as in terms of priming the pump, which is why it's so important. If you look at it from an investor side, where you have these platforms that are allowed to raise capital for 30, 60 days on a platform. If I decide to invest $10,000 in your company, and it's going to take you 60 days to hopefully finalize, that 60 days is my capital's locked up. So it prevents me from investing in another entrepreneur who's more likely to succeed, say next week or the 2 weeks, and we can start producing this and making money, or whatever the social mission of the business is, versus locking it up for 60 days. Now I can't do anything else as an investor. So that's something, in terms of psychologically why it's so important to prime the pump in the beginning, because I'm more likely to say, oh wait, this is almost done. I think a lot of people have already invested. Let me just come in and fill the round. So.
Yeah, I'll leave you with my own quotation, which is, pitching isn't a zero-sum game. And what I mean by that is that particularly a lot of women and people called entrepreneurs think, I pitch and either I get funding that day or I don't. And so a lot of times they're like, I'm going to wait until it's perfect, until I dot all the I's and cross all the T's. And what they don't realize is that by pitching, even if you don't secure funding that day, you might meet some potential investors who might not be interested in what you're doing. However, they might know someone who is. And at the same time, the feedback that you're going to get will probably get you closer to a business model that meets market needs. So remember, pitching isn't a zero-sum game.
Okay, so I just want to add on to that. Terry touched on the importance of building your network before you need it. And in this particular case, crowdfunding is really about your social media network. Make sure that you've built out your Facebook fans, your LinkedIn connections, your Twitter followers, your email list. All of that is your social currency. Offer tangible benefits. So I gave the example of Back to the Roots. Yes, they offered a couple of different levels of discounted products, but they also offered, for $1, updates on their newsletter. Sure, you could have gotten that for free, but they charged for it, and they got people to pay for it. They got people to pay for T-shirts. Some people didn't want to buy the fish tank. So they had an option for those people, which was a T-shirt. Some people wanted to give above the level, so they had a $1,000 and a $10,000 version, and they packaged it with a personal visit or a seminar. So think about the ways that you can package. The one thing I also want to do is talk a little bit about the group learning model that Natalia mentioned, and we haven't really touched on the investor side. So I did do an article today on Forbes about Pipeline Fellowship in the conference that I attended, I guess 3 weeks ago or 4 weeks ago. the group learning model is applicable to the crowdfunding model as well. And if you could just, in just a couple of short sentences, just address why it's so helpful and why women gravitate to the group learning model. Because a lot of entrepreneurs may want to give back, and maybe because all of you in the room are raising money, you may not be at this point be contributing. But once you have raised money and earned a lot, you may want to give back. And I know you address both the entrepreneur and other kinds of wealthy women that want to give back.
So quickly, in terms of, and also just thinking, really tying it into a lot of you who are women entrepreneurs, why does it make sense for you to have more than one angel investor, shall we say? And when you do have an angel investor, make sure that you're actually securing different sorts of skill sets from each angel investor. I usually get asked, you know, like people are like, I need a mentor. And I'm like, well, be specific. Be specific about your ask and your offer so that as you are, in terms of as you're using your well, you're still actually replenishing it. It's like, it's very much about how you can be helpful and how you can help someone help you. So if you actually look and see what sort of skill sets you need, and then make sure to be on the lookout for someone who might be able to fill them out. And then also in terms of for the angels in training, as we call them, being in a room where someone brings in the finance, you know, background, or someone else actually knows much more about social entrepreneurship as the issue, that rounds out a group. And it's also a really interesting experience in terms of peer-to-peer learning and getting to be stretched by others.
Terrific. So I want to thank Terry, Natalia, and Jeremy for a terrific panel. I do hope you'll connect up with them. And if you want to read more articles about crowdfunding, go to ventureneer.com, crowdfunding.